Distinguished speakers, ladies and gentlemen, good afternoon. On behalf of ACCCI, I would like to welcome all of you for taking time to attend this webinar series on the market outlook and the business opportunity in ASEAN. While COVID-19 has made many companies focus on their near-term challenges at home, I'm pleased to know that many businesses are also keen to be updated on the latest development and opportunity in ASEAN. This webinar series that we have put together for you over the next 5 days will cover 5 key ASEAN markets. Although the pandemic hit Asia first in the region, including ASEAN, have today recorded a significant lower transmission and the death rate than other regions. In ASEAN, government have introduced economic support measures of different magnitude to cushion the impact of the pandemic. Now, the government are turning their attention to reopening and gather their economy to get back on track. The private sectors very much welcome such move because it means we are open for business again. In this economic recovery process, government are also taking steps to identify new growth opportunity and attracting new investment. For example, Singapore is building up our vaccine manufacturing capability. Thailand has announced policy to establish the country as a hub for electronic vehicles. Malaysia is looking at attracting investment into renewable energy, and Vietnam has become a popular destination for electronic manufacturing. The lockdown in the earliest month have also driven a sharp increase in the adoption of technology and digital tools within ASEAN. Governments are now stepping up to help their company to develop digital capability in order to capture new opportunity and not to be left behind further in the new economy after the pandemic. Economists from the ADB and IMF have projected ASEAN economy to rebound strongly next year at a growth rate between 4 to 6%. All in all, notwithstanding the slowdown due to the pandemic, ASEAN will remain an attractive market for Singapore companies. Within ASEAN, Singapore has started the Green Lane arrangement with Malaysia and Brunei. As we learn and adopt from this experience, we hope that this will be the precursor to another bilateral private bubble with ASEAN. With that eventually in place, this will be easier for businesses in ASEAN to follow up on the opportunity and attend their business need. This afternoon, we kick off our webinar series with a focus on Indonesia. Singapore and Indonesia have robust economic ties. Singapore is consistently among one of the Indonesia top foreign investor and the top trading partner. To overcome the impact of this COVID-19, Indonesia has rolled out a fiscal package of nearly 700 trillion rupiah to help local businesses, households, and to save jobs. Indonesia is the largest economy in South Asia. Its economy is projected to rebound to be between 4 to 5% next year. Indonesian government is taking a chance of this pandemic to rebut and reform its economy, which may present a new opportunity for Singapore companies. Indonesia is a diverse market. It is resources rich, have a huge consumer market, and offer an attractive manufacturer base. Here is also a lot of scope in infrastructure development and urban solution. In the region here, the high mobile penetration in Indonesia also drives many e-commerce services. We have an established panel of speakers today who will be sharing with us on the latest development and opportunity in Indonesia. I urge all of you to participate actively. I would like to thank our sponsor, OCBC and UOB, for partnering chamber to make this initiative possible. Last but not least, I also wish to express our sincere appreciation to our government partners, the Indonesian Investment Promotion Center, for your strong support. I wish everyone have a fruitful and productive session ahead. Thank you.
Okay, and thank you, President Ng. And now let me introduce our first speaker for the day, Mr. Walian Wiranto, who is an economist at OCBC Bank in charge of covering Malaysian and Indonesian economists at OCBC Global Treasury Research. He will be sharing more about the economic and outlook of Indonesia post-COVID, as well as the new norms that will affect the country and industries in general. So over to you, Walian.
Thank you, Tiffany. Thank you. Thank you, Aaron. Well, in today's session, I'd like to do a few things. Obviously, we didn't pick this date with the renewed lockdown in mind. If only we could forecast that well, we couldn't. But obviously, that's top and center of people's thinking about Indonesia today. And as you know, the governor of Jakarta, Anies Baswedan, just announced a so-called PSBB, as we call it in Indonesia, renewed lockdown again for the capital city starting today. So obviously we need to tackle this first issue, first of all, virus. So we'll talk more about that. What led Indonesia to do a lockdown again, right when a lot of other countries are actually exiting from lockdown. Then we talk about the economic consequences of the previous lockdown, and then we touch upon what kind of impact we're going to see from this current measure. And also, last but not least, obviously with the idea that we always have to look ahead. Like President Roland Ng has mentioned, pandemic has caused a big impact for businesses everywhere, but as businessmen, we always have to look out for opportunities. So we got to look at the road ahead. I want to spend more time on the element as well. So without further ado, just because we have a lot of good speakers ahead of myself, let me just jump straight in. Now, like I mentioned, what is the root of the issue here? The virus. This is just some charts to illustrate the kind of challenges that Indonesia is going through. So as you know, for a while, Indonesia actually registered 0 case for a long time compared to other countries. But by the month of May, the month of March, we started seeing more and more cases. So led to a first lockdown, PSBB, we call it, basically standing for large-scale social restrictions for all intents and purposes, really limiting how much businesses can open, how many people can stay in the office, etc. So in terms of the terms, it's really lockdown by other means. Having said that, the kind of lockdown measures that Indonesia adopted might not have been effective enough, perhaps in terms of the scope of the measures, but also in terms of the implementation. Sometimes we say, Indonesia, we are a bit you familiar with the term, a bit degil, basically a bit naughty. You try to, if the law says ABC, you try to maybe say just, how about we just do A.5. That's precisely the kind of situation that Indonesia has gone through. So while the lockdown was happening and exiting some of the lockdown measures, I think some of the social restrictions, some of the so-called, wash your hands, stay away from public as much as you can, wear your mask if you can. All these are very valid and very useful public sector measures, but in terms of implementation, in terms of the, just making sure people do that, I think that's fallen short quite a bit. So the cases, instead of coming down, the so-called plateauing that we started to see in many other countries, including Malaysia, Singapore, for instance, we see that daily cases started to come down. Instead of having that, however, for Indonesia, unfortunately, the cases skyrocketed. So, the last few days, for instance, we saw more than 3,000 cases on a daily basis. And I think the lockdown was done precisely because the cases were picking up so much that if the administration did not pursue this lockdown again, then there's a risk that the hospitals will be overrun. I think by governor's own calculation, if they didn't do this lockdown, then the ICU beds, they'll run out of ICU beds I believe by the end of this week. So hopefully, this time around, lessons are learned. The right lessons are learned that, if we don't follow the lockdown, if we don't swallow the bitter pills this time around, then we basically run the risk of, taking all these costs on board without the benefit of having lockdown. Obviously, lockdown is a very, very hard measure to adopt. I think any government anywhere has been faced with this very, very big dilemma. On one hand, you want to protect jobs, you want to protect livelihoods. On the other hand, if you let economy run as per normal, 100%, what have you, the lives are lost. As you know, a lot of people have been, suffering this COVID-19, not just in Indonesia but everywhere. But somewhat, I would say, special, not in the right way, not in a good way for Indonesia, is that number of deaths has also been picking up. So, for instance, some days we actually saw more than 100 deaths. That's just simply not acceptable. In fact, one rather sad measurement that we track is that the number of burial plots. And one reason why the governor actually chose this tough path of locking down the Jakarta city again was the fact that not only hospital beds were running out, not only ICU beds were running out, but even burial plots were running out. So it just tells you the kind of scale of the challenges. So, like I said, nobody wishes for this to happen, first of all, right? But now that we're facing with this situation, I think it is a good thing that the administration has done this and done this quite proactively in terms of locking down the city again. I think I'll leave some of the other speakers, including Tua, who was actually based in Singapore now, Indonesia now, who know the situation very well. I'll leave you to speak more about the details, but I believe some businesses can still operate at 25% capacity and all that. So in relative terms, we don't see this damage being as bad as in quarter two. Quarter two, obviously, not only Indonesia was in lockdown, but a lot of other countries were also in lockdown. So even if you could open your factories to do your exports, there was simply no demand. However, this time around, hopefully the saving grace is that the damage is there, but not as bad as before, just because at least the export activities are there. Some activities can resume, although at lower capacity. So something to think about. So that sets the tone in terms of tackling what is really the front and center. The clear and present danger for Indonesia remains the virus. The next slide, I'll look back a bit. I always joke that economists are people who drive by looking at rear view mirror. The reality is we do that quite a bit just because data, when it comes out officially, tends to be quite backward looking. The last GDP data that we have is for quarter two, meaning from the month of April, May, June. The slump was really bad. Contraction was it contracted by 5.3%, meaning growth was negative. That's easily worse than expected. Also, the worst that Indonesia has seen in terms of GDP growth since the Asian financial crisis. Obviously, Asian financial crisis wasn't a happy time for Indonesia, but this time around the challenge was as great. So if you look at the number of wounds that we are seeing is across the board. As you know, consumption is a big deal for Indonesia. In a country of 250 million people or so, I used to joke that as long as we smoke some gudang garam, eat some Indomie, we get good GDP growth. That remains the case. However, we need more than that. I think consumption has been suffering quite a bit because, as you know, even if you have money to spend, you don't, you feel okay about your job prospects. Even if you want to spend, when the malls are closed, obviously, the avenue for you to spend is a bit less, even if there's e-commerce and all. So consumption has taken a hit, especially in some of the outlying regions where, so-called rakyat kecil have been suffering the most. And also investment side, as you know, as businesses like yourself would know very well, even if you see a very good business opportunity, just because there's huge uncertainty ahead, you tend to at least, not so much withdraw, maybe 100%, but at least hold back to look out for the uncertainties to crystallize and see how the situation develops before you commit the bigger sums of investment. So that's precisely what has happened. Investment has suffered. And like I mentioned a bit earlier, because everywhere, including the major markets of US, Europe, Japan, and also elsewhere in ASEAN, export activities has been suffering. So because the demand has slowed down, even if demand is there, the factories weren't operating. And even if the factories were operating, the logistics was just a pain. The shipping schedule, everything was thrown asunder by the pandemic. So all these combined together to hit Indonesia's growth pretty badly. That's why we contracted by a massive 5.3%. So I think we look for help in this kind of situation, as Mr. Roland Ng has also mentioned. A lot of governments, including Indonesia, have also thrown out big fiscal stimulus. It is a good thing. However, the case for Indonesia is a bit more nuanced. We might have found the money to spend, but actually the spending part has been an issue. Indonesian government deal with a lot of issues, including lack of data, including the fact that we have so many islands, so many provinces, and so many layers of government. So even to disperse the money that we find is tough. So the disbursement part has been super slow. We're almost near the end of the year, almost. I know more than 2/3 through now. Disbursement remains low at sub about 30%. So because of that, actually government spending, which should have helped growth, actually it didn't. So in Q2, actually it was a net negative contributor to growth, despite the fact that the government threw out so much stimulus money. So I think until the spending pattern comes up again, especially from the government side, because government, like I mentioned, has the money to spend now, I think we're looking at fairly weak growth still. So combining that with the fact that we are having to see a lockdown again in the capital city, hopefully it stays there. If it extends beyond Jakarta to some other parts of Java and also Bali, we might well see growth suffer a bit more. But our baseline expectation has to be revised down just because Jakarta contributes 20% of the GDP. So anything that happens in Jakarta, obviously going to hurt the national growth quite a bit. Because of that, in terms of numbers, we're looking at Q3 growth of -2, Q4 at about -1 overall, because again of the steep decline in Q2. Combining everything, we're looking at about -1.3% growth. I think government is looking now at around that region. I think the bottom is about -1. However, we see a bit more, slightly less optimistic uptick, at least in the near term, just because of all these somewhat unfavorable factors for Indonesia in the near term. The next slide, I would say, if you look at all this, these are just so-called higher frequency indicators. If you look at retail sales, for instance, obviously, the month April, May, these are all year-on-year. So -20, -16. By the month of June, July, we started to see a bit more recovery. Obviously still negative, but at least not going worse. The same thing for consumer confidence. While it was declining, especially for the month of May, when the pandemic was worse, things were starting to improve again. Same thing for vehicle sales, right? The same pattern. You might see, I would say, a V-shape or even higher than V, like a Nike swoosh. PMI, same thing. And as you know, above 50 means more manufacturers are expecting the outlook to be more positive in the months ahead. So Indonesia, the good thing is that even though Q2 number was really bad, by the month of June, July, we started, especially into August, we started to see recovery. So that's a good thing. The bad thing, obviously, even these so-called higher frequency data tend to be that we're looking at now in the month of September. And now that people know that we are having to go through lockdown again, I won't be surprised if we start to see consumer confidence come down again, at least slightly. Maybe not as bad as in April and May, Same thing for vehicle sales, etc. But I would expect this number to come down again. Meaning, we might not see things as bad as Q2, but the recovery path that we expect to go at least like this, and now starting to go like this. I don't know which direction you guys are looking at, but especially essentially the degree in which we recover has to be more tempered. The enthusiasm for recovery is still there, but be more tempered than before. And in terms of fiscal posture, like I already touched on a bit earlier, Indonesia used to have this fiscal rule, meaning no matter what happens, Indonesia government has to maintain a fiscal balance of not deeper than -3. Obviously revenue is lower than expenditure, but you cannot have a more than 3% shortfall. They changed the law to allow for temporary suspension of that rule, just to battle this pandemic. So this year, for instance, we're looking at spending that will pick up so much that the deficit will be more than 6%. Next year will be around 5%. So this is the headline numbers. This basically taking into account the fact that Indonesia government had to step in to spend. This is because a lot of other key spenders, including consumption, including investment, and also export demand, simply not there to make up for the shortfall. The issue, however, like I said, is that two things. First of all, we might have the money now, but the spending pattern is still very slow. So the government offices, etc., have been slow in spending their budget. In usual time, there might be a good problem, but now it's actually a bad problem just because we really do need government to spend. The other side of this is that although the bulk of the money the government has raised come from the debt market, they sell to public, including foreign investors. That's still the key. But they also have to get Bank Indonesia, which is a central bank, to buy the debt in the so-called debt monetization. I think layman term, sometimes people call it money printing. Essentially, central bank just create money out of the blue and buy the government debt. It's a bit like magic. As with any magic, they take a sleight of hand, and with any magic, there's always the risk that people might see through it. And the danger is that if this is a one-off, that's okay. But the danger is that if Indonesia government has to do this again and again, market might lose a bit more confidence. There's also this talk about changing the law to change the way Bank Indonesia operates. From the foreign market perspective, they treasure this thing called central bank independence. They want central bank to be able to make their own decision in terms of when to increase their policy rate, when there's inflation, when to decrease it, etc. But now there's this talk about how the government might want to, the parliament might want to change the law such that allow the government to have more say in the way that Bank Indonesia functions. That tends to be not sitting so well with foreign investors. We've seen some action, especially in the rupiah side, some weakening, partly because of this as well. So something to keep in mind. I think, long story short, we don't expect this law to pass, at least not in its present form, because it's simply too, I would say, too radical. However, some changes are probably going to come through. And until that happens, I think it's going to still be an overhang for the financial market, unfortunately. And I think, like I mentioned earlier, foreign holdings is still relatively high, about 28%, but it's definitely dipped a lot. This is basically how many percent of foreigners own, how many percent of the Indonesian government bonds owned by foreigners. It used to be super high, almost 40%, but because of the crisis, because of the way the government has been handling the crisis in terms of market confidence, etc., it's really come down a bit. That's okay, but at the same time, at the end of the day, you want to find buyers for your bonds. If the foreigners are shying away from buying your bonds, then it runs the risk of you having to get Bank Indonesia to buy the bonds furthermore. I think that tends to be a chicken and egg issue. The more foreigners stay away, the more BI has to buy. The more BI has to buy, the more foreigners stay away. That's not a good cycle, and we want to get out of that. So far, because the global yields have been low, because of money printing, but also the Fed, the ECB, the BOJ, etc., everyone's doing it. So the sovereign bond market has been staying quite contained. Bond yields have been staying quite low. Because of that, Indonesia bond yields has also stayed low. We don't want it to be high. Obviously, the higher it is, the higher the servicing cost. It comes at a time when we need to borrow more. That's not good news. So as long as it stays below 7%, around 7%, or for the 10-year yield, we're okay. but I'll be more watchful if markets starts to be concerned again of the two issues, including the BI law amendment and also the virus resurgence for the lockdown risk. So something to keep an eye on, because you have impact on the next thing we're going to talk about, which is rupiah. You know, the more foreigners want to own Indonesian bonds, the more they bring their dollar into Indonesia and exchange for rupiah. The more they exchange for rupiah, more demand for rupiah. Rupiah does what? Appreciate, and the dollar IDR goes down. But that hasn't been happening. In fact, dollar IDR in terms of the rupiah has been weakening, meaning dollar IDR has gone up. You need more and more rupiah to exchange for $1. Some days it's so close to 15,000, which is, I guess, at one psychological level, that Bank Indonesia has to intervene to sell dollar in the market and buy rupiah just to keep it contained between below 15,000. I think in the near term, like I mentioned, despite the fact that actually we have been seeing overall fairly weak US dollar environment. So if US dollar is weak and rupiah is still weaker than that, obviously rupiah is going to depreciate even more against other currencies, including say Singapore dollars, which is now obviously more than 10,000 per Sing dollar. So that is not a good dynamic. We want to see fairly contained. Maybe if BI can continue to keep rupiah stable around 15,000 level, I think we're still okay. One reason why we think Bank Indonesia, even though they sound super dovish, they sound really supportive of growth, they want to continue to be supporting growth. They have indeed cut interest rate a lot, you know, for 6%, all the way now to 4%. So already a fairly historic low level. There's pressure for them to cut some more, but I think they cannot cut any further than this. Because the more you cut rate, the more the yield gap, so-called yield gap, how much investors get from buying Indonesian assets versus getting from other assets, including US Treasury, the gap narrow. Obviously, as businessmen, you know, you want to go for those that give you a fatter returns. If the returns get lower and lower, you are less interested. So the more BI is forced to cut rate, the more the narrower the gap, then foreign investors' demand for Indonesian bonds will be less. They want it to be there the other way around. They want to protect the yield differential. Because of that, I think BI, as much as they want to be supporting growth by cutting rates, the room for them to cut rate further is getting more limited now. I think at most they can cut once or twice, but if you see not much further than that. So that's an environment that we're going to see. Because rupiah has to be staying stable, because of that, Indonesian Indonesian central bank cannot cut rate too much, even if they want to support growth. They might do other stuff, including continue to launch more and more QE, ballooning the balance sheet, buying more government debt. But I think the central bank interest rate, we're not likely to see very deep, sharp cuts from here. There's something to look out for. And I mentioned a lot about sort of what's now, what's in the near term, what's in the next good quarters. Obviously, like I mentioned at the start, we want to see a bit further ahead. I'm not talking so much about, if you ask me what's 2021 growth, what's 2022 growth, I can give you a number. But to be perfectly honest, it's worse than crystal ball because there's so many uncertainties. I can tell you, maybe it's 4.5, maybe by 2022 it's back to 5%. But that's really, really very low probability of that achieving right smack there because there's so many uncertainties. What I'd like to do more, instead of telling you the exact numbers that's likely to be wrong, I'll tell you what kind of opportunities that might come ahead that we can't exactly put actual numbers to it, but these are the trends that we gotta look out for as businessmen. One of the things, look out three things. I think first of all, I mentioned here counting on China. What do I mean by that? As you know, for better or worse, China did enter this pandemic first. They're also the first to come out. In the accounting term, is FIFO, first in, first out. So because China entered the crisis first, they exited first on the virus part. The economy also did the same thing. Q1 was super bad for them, but by Q2, they started to recover more actively. And because of that, you know, we got to look at how much of ASEAN exports go to China. Because at the end of the day, we know the demand from other major customers like US, EU, Japan is there. It started to recover, but it's still a bit rough. We want to be able to export to those that actually have demand picking up more sharply and more sharply in the near future rather than in the later future. So just look at this. I think overall, I think it's not surprise to anybody that China is now the largest ASEAN export destination, followed closely, I'll say, by US, EU, and Japan. For Malaysia, it's a lot higher. For Indonesia, it is still, China is still the biggest at 17% or so. US comes close to second, 10%, etc. Japan is a big market as well. But as long as China does recover more strongly, I think it's good for ASEAN overall. Also for businesses that are more geared towards exports overall. And if you can gear exports towards China more precisely, I think that's going to be helpful. China is recovering, obviously not at the speed that we saw in the years before, right? Not double digit for sure, not 8% for sure. We'll be lucky to get sort of mid 4-5% this year, etc. So, but still, compared to other countries, they're still experiencing recession. That's a good thing. So that's something to look out for. That's one trend that we gotta be watchful of. Not just exporting, but where you export to, what kind of product mix. Especially as you know, China is undergoing a big shift towards consumption, etc. So something to look out for there. The bigger trend number 2, I can focus here, is really reforms. We're always hopeful of reforms. I mean, the good institution SCCI also invited us to speak at the beginning of this year, I believe. And this is a chart that might be familiar to those that attended the session back in, I think, Jurong Town Hall, if I don't remember wrongly. And I told the attendees back then that this is a chart that I've been using for almost 10 years. It continues to be there because the problem is there. Indonesia should have benefited a lot from this China plus one strategy, meaning a lot of manufacturers, because of cost, because of the geopolitical tensions that's rising between US and China, they want to diversify away from just depending on China alone in their factories, in their production capacities. And instead of going to Indonesia, which should have gone up a lot, because it has a lot of people. We have more than 250 million people, like I mentioned, lots of natural resources, lots of untapped potential, which have benefited from this drive. Unfortunately, despite the good work of BKPM and other agencies, the shift has not been as profound. People tend to like going to Vietnam more, to Thailand more, to even Malaysia more, despite the cost differential, because the supporting supply chain is a lot better there. So that's something we got to tackle. And one way to tackle that, the administration knows, especially Jokowi in his second term, the new cabinet, one of the key planks when they were sworn in to welcome more FDI. And one way for them to do that was to push through this thing called omnibus law, meaning a big law that includes some of the changes to the law, labor law, that will at least decrease the cost of firing people to be more in line with other countries. Because at the end of the day, if it costs too much to fire people, you just simply don't hire. That's the sad reality. Because as businesses, we have to take care of all kinds of scenarios, including downside scenarios like what we have experienced. So unfortunately, the omnibus law passage, if I may be blunt here, I think the probability of passing it has decreased massively because of pandemic. Labor unions have always been quite strong in Indonesia, making up for lost time under Suharto. And since the Reformasi era, labor unions have been very strong, taking care of business, taking care of the labor interest. The unfortunate side effect of that is that the law has favored them, I'll say, a bit too much. To change that also always been tall order. We're going to see demonstrations in the street, etc. That's granted. However, because of pandemic and the probability of job losses has gone up so much, I think the labor refusal to concede to some of the changes here will be also higher, quite understandably, because the probability of getting your job cut, etc., is also higher. So you don't want to lose the benefits you might gotten from the old law, which is likely to be reduced under the new law. So the kind of opposition that we're going to see is probably going to be high. I might be wrong. I hope to be wrong. I wish for my own country to be wrong on this, but I think the probability of passing this law might be quite dim, at least in the near term. Until the economy starts to recover again, people will feel more comfortable with economic prospects, then we can talk again. Until then, I think for politicians to push it through will be quite low chance at this point. And last but not least, I think another big trend to look out for is this. We've grown so accustomed to Indonesia being a commodity exporter. And like I mentioned earlier, this country is endowed with a lot of natural resources, from a bit of oil, a bit of gas, not so much now because of the whole issue of not exploring enough, but across the board, say for coal, for palm oil, we're big exporters. So anything that happens in commodities is obviously going to affect Indonesia for better or worse. earlier this year, if you recall, oil price was actually negative at some point. Since then, however, oil prices started to recover a bit more. Last few weeks started to come down again, but overall, definitely still a lot better than what we saw in March and April. So that's a good thing for Indonesia. Even though we are no longer a net oil exporter, but because higher oil price tends to bring up the prices of other commodities, including coal, including palm oil, that benefits Indonesia. So hopefully that trend continues just purely from the fact that Indonesia can, we call cari makan, find a living here in terms of finding commodities to export. Another trend that benefits commodities really the idea that because a lot of central banks have expanded their balance sheet so much, inflation is a matter of time. So whenever there's inflation concern, it might not happen this year, it might not happen next year, but if investors start to think about the longer term, they want something to hedge against high inflation, gold and other commodities tend to benefit. We see that from this chart as well. So I think that's one trend to look out for as we try to see beyond the virus as much as we can, even as, like we said earlier, this is the very first day that Indonesia has to go through lockdown again because of the virus. Despite that, we got to look beyond the virus, and I think commodities being on the uptick again might be one way for Indonesia to benefit. I think for businesses that exposed to commodities, that might be one good trend to look out for. I think I'll stop here because I'm conscious of time. I want to be able to give time for other speakers and also for Q&A. Thank you very much. Let's enjoy the rest of the speaking session. Thank you.
Okay, and thank you, William. Thank you so much for the presentation. Okay, and next up, we have Bapak Muhammad Faisal, Director of the Indonesian Investment Promotion Center, IIPC Singapore. He'll be talking about some of the key changes implemented by the Indonesian government post-COVID and opportunities and investments that foreign businesses should explore after the crisis. So, Bapak Faisal, please.
Thank you, Tiffany. Good afternoon, distinguished investors, ladies and gentlemen. Today I'm here to share a little bit about BKPM and also IPC's strategy to boost investment amidst the pandemic of COVID-19. So I will start with the IPC slide first. Yes, next. Yeah, IPC is Indonesia Investment Promotion Center as a representative office of BKPM, Indonesia Investment Coordinating Board. Right now we have 8 offices around the world, and one of them is in Singapore here. And we cover ASEAN member countries. So our job is to bring investment from ASEAN countries to Indonesia, and also facilitating if any Indonesian company want to invest in ASEAN countries. So I will pass the macroeconomy. I think Pak William already explained about it very well. So yeah, this is top 15 source of FDI in Indonesia. So number 1 is Singapore. I think for the last 6 years, Singapore is our number 1 top source of FDI to Indonesia. And since our territory, we cover ASEAN countries, so you can see other than Singapore, we have Malaysia number 6 and also Thailand number 13. So our strategy in IIPC is to try to invite investors from these 3 countries. Yeah, I think this is some sector from Singapore. I think you can see in this list for the last 5 years, housing, industrial estate, and offices is a top sector from investor from Singapore, followed by food crop, plantation, and livestock. So this is the characteristic of the 4 FDI source of investment to Indonesia. So talking about role of BKPM, BKPM has carried out its duties under 6 key performance indicators. So this is 6 indicators that our strategies to boost investment performance. So we are focused right now in number 2, acceleration of large investment realization, and also focusing investment to targeted sectors and countries. The next is with the aim to create more conducive investment climate. So President Instruction number 7, year 2019, last year, was issued to give authorization for BKPM in terms of business licensing. So all in all, BKPM is the front line in accelerating ease of doing business right now. So the implementation of this president regulation has been taken place. So in accordance to that, 22 ministries or government institutions have issued ministerial regulation decree to delegate business license to BKPM. So the investor just come to BKPM. They don't have to go to many offices, but only one office at BKPM Jakarta. So BKPM strategy, we have identified strategy with the pandemic to maintain the investment climate. We continue to do our best to facilitate the needs of existing companies that are already operating in Indonesia, and also focus to facilitate the bottlenecking the potential investment of those existing companies that have not been executed. Aside from that, BKPM work to bring in the new investment with the new special task force for relocation and formulating incentive for existing companies that are going to conduct expansion. All of these are carried out in compliance with new normal protocol. So as an effort to break the chain of COVID-19 virus transmission, the chairman of BKPM has issued a decree on providing ease of business licensing for certain business field related to handling of COVID-19. BKPM will facilitate companies with licensing in medical equipment, pharmaceutical, and supporting industries. In regard to reduction and or facilitation of business license requirement, acceleration on the business license process, and special assistance service. And also another role from BKPM is, as we all know, the ongoing trade war between US and China has encouraged global companies to relocate from China. Therefore, Indonesia needs to seize this opportunity. BKPM has formed special task force team to dedicated to capture the signal and follow up. So our team will facilitate and provide end-to-end services, formulate incentive by listening to investor needs, as well as assist investor in meeting with relevant stakeholders. Yeah, we have targeted 143 companies coming from USA, Taiwan, South Korea, Japan, and also Hong Kong. From these companies, 7 of them has committed to relocate their production base to Indonesia with 12 trillion rupiah of potential investment realization and 30,000 employment of local workers. So we remain very positive that we can bring more investment relocation to Indonesia. Also, we we have another strategy that BKPM support foreign workers and also foreign expatriate to visit to Indonesia, because many of businessmen here in Singapore ask IPC whether can I go to Indonesia? We have business there. Is that okay that we go to Jakarta? So I will say yes, because we have agreement with the Ministry of Justice and Human Rights and also Ministry of Manpower. So BKPM can provide a discretion or in the form of a letter of recommendation for a foreign worker visa application. So the companies who want to, or if you need to travel to Indonesia as a businessman, you can submit this application for a recommendation letter to BKPM. This is the procedure. So for the investor, also foreign expert, and business visit, they can travel to Jakarta with the recommendation letter, but also after arrival in Jakarta, you have to get compulsory swab test using PCR method before continue to final destination. So in the period of April to July here, BKPM has issued recommendation letter for 400, nearly 500 companies with 155 investors. So I think in September now it will be more than that. So also another target of BKPM is the bottlenecking of investor. Also, we believe that resolving investment bottleneck in Indonesia is one of promotion strategies to attract inward investment. From 708 trillion rupiah investment realization potential in the pipeline, we managed to facilitate 400 trillion rupiah. So it is to be noted that BKPM is not only facilitating huge investment problems, but also provide assistance for medium and small investment. I think investment incentive, I will touch a little bit. I think later Andrew maybe will also explain about this. So we have tax holiday here. Company will get 5 to 20 years of tax exemption, also plus 2 years of tax rate reduction based on their amount of investment. According to the regulation, currently there are 18 pioneer sectors. Here you can see at the right-hand side, upstream base metal industry, oil and gas purification or refinery, petrochemical, inorganic, and so on, and also digital economy. Besides tax allowance, we have also, besides tax holiday, we also have tax allowance here. The government might provide the following tax concession to companies following their investment in certain design regions, and also the company must meet the criteria with a high investment value or for export purposes, high absorption of manpower, local content, and project location. So we hope with this location we can invite investors not only to come to western part of Indonesia, but also to the eastern part of Indonesia, outside of Java Island. I believe many of investors from Singapore, they came to Java, especially Jakarta and also Sumatra with the Batam Bintan Karimun. Aside of tax holiday and tax allowance, investor can also enjoy the import duty facility. This is the exemption of import duty on imported capital, machinery for 2 years, and also the raw material for 2 years. But if the company use local content machinery, they can get 4 years of importing raw material. And also Green Line acceleration facility. As for the Green Line, it guarantees acceleration and certainty in custom clearance process, with cutting the process time from 3 to 5 days to only 30 minutes. And also simple requirements. I think you can see one of the requirement is the recommendation from BKPM. So I hope with this Green Line facility, many company can use it. Yeah, I think this is a super deductible tax. Companies which are engaged in labor-intensive industry or conducting working program and internship or conducting research and development are eligible to obtain super deductible tax based on Ministry of Finance regulation. But the technical regulation for research and development is still on process. I think talking about investment opportunities, with the situation of COVID-19 pandemic, many sectors hit very hard, like tourism and leisure, also transportation, aviation, and maritime. Like hotels, also restaurant and transportation is hit very, very bad. But also some sectors like e-commerce and healthcare will get a very good benefit. But we hope with this situation we can move forward, and then we hope next year tourism will getting better, and then all the sector will come back again. This is a potential sector that the government of Indonesia needs. So we invite the investor in the labor-intensive manufacturing and also export-oriented manufacturing. Other than that, the new one is pharmaceutical and medical device industries. So many of company producing masks or any other devices, medical devices. Also renewable energy infrastructure and mining industry. So I think besides that also the food and agriculture industry. Yeah, I think I have a little bit time here. So I would like to introduce you about what we are doing in Singapore here. We promote some projects from Indonesia. We have annual event that we call Indonesia Investment Day. Now is this year, this is the 3rd year. So the first Indonesia Investment Day, IID, and the second IID, we do it offline. So we gather in the business forum to introduce the projects. But since the pandemic of COVID-19, we do it online this year. So we promote more than 100 projects from 11 provinces. So we do it starting from August 11, and we hope we will have the last webinar in October 27. So we do it in the webinar every Tuesday. So tomorrow is we already did 5 webinars. So tomorrow we will have the number 6 webinar promoting in a project from Lampung province. And then at the end, 27th of October, we will have the main event of Indonesia Investment Day. At the time, we will invite the chairman of BKPM to as a speaker, and also some high-level speaker also will do it online. The platform is using a website, investindonesia.sg. So if you want to attend the series of webinar, or if you want to register for one-on-one meeting, you can directly visit the website. So I have, this is the next event. Tomorrow we'll be promoting projects from Lampung, followed by West Nusa Tenggara, West Java. The last is 20 October, South Sulawesi, and our main event is in 27 October 2020. This is the 3rd Indonesia Investment Day. Yeah, these are some potential projects that we introduce. This one is Kertajati Aero City, designed as an international airport in West Java. Another is from Jakarta. We introduced MRT project here, phase 2, and also we introduced LRT. Another sample is from Central Java, is Semarang City Waste to Energy. So this tree is, as you can see, not only the infrastructure. We invite also the investor to know more about the manufacturing sectors, fishery, and property like industrial estate. Yeah. I also have a video here. So with this video, I want to invite you to attend the series of webinar of Road to IID and the main event of IID 2020. This event will be a good opportunity for you to know more about potential projects introduced by regional government.
Welcome to the 3rd Indonesia Investment Days website. As the Indonesian flagship event for enhancing foreign direct investment from Singapore to Indonesia, the 3rd Indonesia Investment Day will have virtual activities like never before. Weekly webinar with representatives from regional government across Indonesia presenting ready-to-offer project. The main event itself, which is the 3rd Indonesia Investment Day, with special event keynote from high-level government officials. With virtual investment clinic and one-on-one meeting, this event will also be your one-stop solution to fulfill your interests investing in Indonesia. Through this website, you can discover the latest investment opportunities in Indonesia, accessing ready-to-offer projects, and interact with government representatives virtually. All of this by a single click to www.investindonesia.sg.
Yeah, if you want to know more about IID, please visit our website, investindonesia.sg. Lastly, I will give you a hint. If you want to invest in Indonesia, my suggestion, you should find a partner. Not only a partner, but a good partner. BKPM and IFPC Singapore will be more than happy to be your good partner in realizing your investment. Please, you can contact us, IFPC Singapore. This is our address and also our phone number and email. And then we can meet in virtually, of course, with the Zoom meeting. And allow me to invite you once again to invest in remarkable Indonesia. Thank you very much.
Okay, and thank you, Bapak Muhammad Faisal. Thank you so much for the presentation. Now, I understand some of the participants asking whether will they be able to receive the speaker's contact point. Rest assured that after the event, we'll be sending out a thank you email to all the participants, and we will include the speaker's contact point for your referencing too. Now, without further ado, let us welcome back our third speaker for today. We have with us Mr. Andrew Raymond Tua, partner of Tua and Soprato. Now, Andrew specializes in corporate and commercial cross-border transactions, foreign direct investments, and legal due diligence. He'll be talking more about the key considerations that companies should take note before venturing into Indonesia, what are the common mistakes that they make in terms of culture, legal, taxes, and business regulations, and some of the new norms post-COVID that foreign companies should be mindful of. So over to you, Andrew.
Okay, thank you so much, Ibu Tiffany. Good afternoon, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. My name is Andrew. So first and foremost, I would like to thank SCCCI for giving us this opportunity to share. As we know, Indonesia abounds in opportunities. And I will hope to give some legal insights to companies who are already operating here. Perhaps you can seize new opportunities to restructure, to make your business even greater. Now, for investors who are coming in, I hope I can give you some brief insights as to allow you to be set up for success. So let me share my screen. Okay, great. So this is a little bit about our non-resident senior consultant. She's based in Singapore. So we are affiliated with Angeline Tupato Law Corporation. And she's our non-resident senior consultant who's unable to join us today, unfortunately, because she's unwell. This is a little bit about myself, which I will share the slides with everybody after this. Okay, so this is an executive summary. We'll quickly touch base about the pandemic right now. What's the situation happening? I'm sitting in Jakarta right now, so I can give you all first-hand updates as to what's going on now, and also the omnibus bill, which Pak Welian touched on before, and then also the new SEZ in Batam, as well as the investment regulatory framework and some introduction to taxation and case studies to be concluded with how to avoid common legal pitfalls. Okay, so right now, in terms of the pandemic in Indonesia, yes, traveling is still restricted, but as what Pak Faisal mentioned, investors are able to travel to Indonesia. Of course, you need to have special permit issued by the government. In a sense, it's possible to do so, but timeline-wise, it's better to prepare in advance because there are many applications, and also some of the government offices, they're also working from home. Now, with regards to the PSBB, large-scale social restrictions, which Pak Welian already touched on. So basically, it was issued late last week. And I myself was quite surprised by it. It just, at night, they just issued it. So basically, what happens is, before that, PSBB, we are in transition phase. But now, starting from today, there will be stricter measures of PSBB. So in terms of how strict, it's not as strict as it was introduced about 6 months ago. It's now, I would say, a stricter version of what we have in transition, in which all offices are expected to close, except those who are falling within the essential services as listed in the slides. Of course, in terms of retail and F&B, you are still allowed to open. So malls are still in operation right now. So that is good because the government do recognize the positive results that they have achieved in terms of the road to recovery. Like, we are still far from it, but at least based on the trajectory that we have over the past 3 months, we are making good progress, and the government would like to maintain this progress. So I hope with this, we can also shed more light as to what are the new opportunities and what are possible, the new world for investors in Indonesia after this. Okay, so with regards to the fiscal measures, so there are a few fiscal measures provided by the government. You have waivers of employee income tax, accelerated VAT refunds, and also cash subsidies to the Indonesian public as in whole. Right, let me quickly talk about this omnibus bill. So this omnibus bill, it was supposed to be passed early this year based on the government's target late last year, but unfortunately due to global pandemic was interrupted. Basically, it is aimed to increase the ease of doing business in Indonesia. Now, the government, my hats off to the Indonesian current administration. They have been revamping the legal system, all right, over the past few years, and it's really increased, the ease of doing business. So with the passing of this bill in the near future, you hope that Indonesia will be a better and more attractive destination for foreign investment. Okay, so of course, in terms of where we are now, it's still in the process of being deliberated in parliaments, all right? There were actually, there are different stakeholders, all right, representing different interests. So we're trying to find a win-win solution for everybody, including the Indonesian labor unions, as to how we can create a situation or environment that is both attractive to foreign investors, but at the same time acceptable and workable to what we have on the ground. Okay, so with the SEZs, there are two new SEZs, all right, and in Batam, which is the Nongta Digital Park, and also the MRO Batam Aerotechnic. They're all both based in Batam. The former is more towards the IT side. So again, the aim is only one, is to attract more foreign investments and create jobs in Batam. So the benefits of being located in SEZ will include tax holiday, tax allowance, fiscal incentives, free movement of goods, and even simplified immigration stay permits for certain expatriates who fall within the category. Okay, let me just quickly go through this. Okay, so this is actually aimed for foreigners or investors who have yet to enter. So right now, there are two ways of doing so, the direct or indirect investment. You have establishing a presence or a joint venture, franchising or licensing, or even a RO, representative office. So this is some of the major sources of law, which we will elaborate in other slides. Okay, this is the private limited, if you like, for a in Singapore. So a PTPMA is straightforward, can be completed in less than a week. So really hats off to the government. A few years ago, it takes easily 2 to 3 months, but now it can be done within a week. I will also show you what is the negative list, all right, that how that will impact the potential businesses. Okay, this is an example of a typical structure. Now, the reason why you have Singho holding co and company 2 is because under Indonesian company law, you need to have 2 shareholders. So I know in Singapore, you can just have direct subsidiary, but in Indonesia, that's not possible. So this is just a quick illustration of that. Now, this is the negative list. So this list contains a list of activities which are closed to investment or open with restrictions. So what happens is, there we go. This is an example of the list. It shows the different, this is actually a non-exhaustive, the list is actually quite long. So it shows what are the sectors which are open, like for example, in the construction sector is 67% open or 70% for foreign ASEAN investors. So meaning the remaining shares will need to be held by Indonesian parties. So now with regards to the omnibus bill, the government plans to revise this list. This list is long overdue, all right? It's last issued in 2016. So hopefully with the passing of the omnibus bill into law, then most of these sectors that are previously closed can be open to foreign investors. All right, so with regards to joint venture, there are different pros and cons. You must also consider whether it's optional or mandatory. So if it's an optional thing, it will be whether your company's line of business is regulated in the negative list. If it is not, then it's optional. If it is, then it's mandatory for you to find a local partner. In a sense, it's important to do due diligence, and of course, with due diligence and entering into any joint venture relationship, it's always important to have the different agreements put in place to clearly regulate the relationship and contribution of each parties to the business. Okay, in terms of compliance, it's very quick, basically very straightforward. There's core fringe specific. It's a lot more straightforward than it was a few years ago. Again, compliments to the Indonesian government. With regards to the HR law, I know this is somewhat infamous to a certain extent. What I would like to highlight that Indonesian HR law is specific to Indonesia, so Singapore HR laws and practices cannot be used. So one has to get used to the different culture lah. And so far, you know, we advise our clients on the various HR elements, and so far, you know, praise God, puji Tuhan, alhamdulillah, everything is quite okay. And you know, because we need to bridge the different cultures, and it's important, right, to link this, because ultimately, end of the day, whether the business succeeds or not depends on the people who are running it. Now, with regards to rep office, this is another straightforward case. It is no minimum investment required, and basically you are allowed to do promotion, marketing, market intelligence, but the only restriction is you're unable to generate any income in Indonesia. So, in a sense, the rep office is, I would say, a more conservative way of entering the Indonesian market, to understand the Indonesian market, to see the pros and cons and what can be done. Whereas the private limited is actually a full-fledged private limited entity which you can actually do business with. Okay, so these are some of the FAQs. I would quickly take some time to address some. In terms of virtual office address, yes, the answer is yes. You know, you do not need to rent a physical office. You can use of a virtual office address for incorporation purpose. Foreign exchange controls, the answer is no. You are freely able to remit, you know, rupiah or Sing dollars out, and actually the repatriation of funds is a guaranteed statutory right under the investment law. Okay, so quick brief introduction on taxation. So taxation is very different from what you have in Singapore. So the first steps we have is the registration, and then you have the different compliance, which is separated into monthly and annual. These slides will be shared to everybody. So of course, if you have any queries thereafter, we can address the same separately. Now, this is the double taxation treaty between the Singapore and Indonesia, signed early this year. It has been signed, but it has not been formally ratified. So it's still not in effect yet, so to speak. It contains more pro-investor or investor-friendly terms, in a sense that it reduces certain withholding rates. You can see it down here to 10%, 8%. And the overall objective is actually to, again, attract you know, investment, especially from Singapore being Singapore being Indonesia's #1 investor. So this will actually hope to kickstart and also act as a catalyst once it is ratified, probably Q1 in 2021. It acts as a catalyst to springboard the economic recovery after the COVID-19 pandemic. Hopefully by then a vaccine would have been found and distributed, and the road to recovery will be clearer. So in terms of acquisition, you have possibilities of acquisition or even franchising and licensing from Singapore. So of course, when it comes to acquisition, it's important to do due diligence to make sure that whatever you are buying into or subscribing into, you're clear, there's no red flags. With regards to licensing and franchising, again, it's also, I would say, low investment costs. You don't need to commit to any investment amount. All you need to do is just to franchise and license your brand into Indonesia. So one thing I want to highlight in terms of franchise is actually heavily regulated under the law. So there are certain conditions that needs to be fulfilled. Failing which, there is another alternate which is also legal. It is called the licensing arrangement. Licensing is less regulated, although you know, there will need to be certain basic compliance, such as you know, registering your license agreement with the government. Right. So this is the case study. We have two. This is the first one. This is regarding supply chain diversification. So this is what we have. We're actually advising one of the Hong Kong companies in doing this. So what we have right now here is we have two PMA company. Even though it's 100%, there's actually another company here to hold 99 and 1. So, but for ease of presentation, this is 100%. So it owns the land, and then it leases the land and assets to another company that actually runs the manufacturing facility. Okay, so what are the advantages? Advantages would be, you know, we segregate the risk. It's a risk mitigation measure. So there are, I mean, of course, there are other structures that we can deploy, but this is the generalized structure. And also, if your company is doing, in a sense, it's export oriented, then apart from the incentives as mentioned by Faisal, you can also apply for the bonded zone permit, which allows you to import everything as long as it's not within the restricted list, duty free, and import duty free, so you can enjoy the different incentives as well. Now, with regards to the license agreement and technical assistance agreement, the reason why it's here is because if there are certain IP or operational know-how that the holding company or the overseas company will be providing to the Indonesian company, then you can actually formally record it, and it also acts as a source of legitimate and lawful repatriation of funds out to Indonesia. Of course, it's subject to withholding taxes. Then we need to look at the double taxation treaty to see what are the rates. But as a ballpark figure, you can think of it as between 15 to 10% based on the existing double taxation treaty. Okay, the next one is manpower. So with regards to manpower, it's quite sensitive. So basically, in this case, is there are the foreign directors and commissioners who are not residing in Indonesia. They do not need to have a work permit. But however, if this director or commissioner will be signing documents or attending, business meetings, then we advise that you have to have at least a business visa at the very least, if not a full work permit. But of course, having a work permit will also mean that the foreign director or commissioner will be deemed as a tax resident. So we need to balance out the pros and cons as and which permit is best in the circumstances. Now, when it comes to audits and inspection by authorities, basically what happens is if there is an event that there's an audit conducted and you are found without the permit, then of course we can go and quickly rectify the same and apply for the relevant business visa or the working visa. And also the next one regarding handling of disputes. So handling of disputes is it's another sensitive thing. It's a very relationship thing, human thing. We need to make sure you understand the culture and try to get the best solution, win-win solution in the circumstances. So having a good HR manager is very important to make sure that all disputes are settled in an amicable manner. Okay, so let me conclude by giving a highlight on some pitfalls to avoid. All right, so when it comes to due diligence, in Indonesia, due diligence is a must, okay, because it is meant to identify, what are the potential issues or the potential liabilities which can be rectified, and if so, what is the time frame for rectification. So it is important also to distinguish what is nice to have and must have in such a due diligence exercise. Now, with regards to compliance with Indonesian HR laws, yes, I know back in the days, where compliance may not be such a great emphasis for corporate companies, but nowadays, Indonesian government is pushing towards greater compliance, transparency, accountability. So it's important to have independent advice, okay, including tax advice, all right, before actually implementing what on the ground, what you plan to implement. So best market practice may not necessarily mean that is the law, because sometimes the older generation may feel that it's too hectic, too cumbersome to comply, but that is not the case. There are actually benefits of complying right now, because as Indonesian is pushing towards greater transparency and accountability, then it is always better to be compliant from day one, rather than you have to go through the expensive and last minute rectification at the end of the whole exercise. All right. Again, mismatch of expectations. Documents should be placed in day one. It's better to avoid any gentleman's understanding, because many a times we see disputes started because of this gentleman's understanding. So again, documents have to be clear, and of course, with regards to the various documents, we will then have to decide, which is the governing law, the dispute forum. All this we can advise you in due course. Language is another one. Bahasa Indonesia has to be used, okay, in all Indonesian law governed documents. So many times I see this not being used. So again, language is important. Rupiah as well. We have to make sure that the rupiah currency is used for all domestic transaction unless you fall within the exceptions. And spousal consent. Now, if regards to spousal consent, if your partner is an individual party, then of course it's important to get spousal consent because Indonesian marriage law talks about communal property. So it's generally better to get spousal consent to avoid complication during enforcement in due course. So these are the 3 takeaway points. Indonesia abounds in opportunities. So of course, we are here to help you grow and make your business greater. Then proper documents should be placed in day one. And of course, just follow the law and avoid on hearsay. With this, I would like to thank you for your kind attention. And this is our contact details. Please feel free to contact us if you have any queries, and we will share the slides with Ibu Tiffany and SCCI later on. Thank you. Assalamualaikum warahmatullahi wabarakatuh. Shalom. Thank you. Ibu Tiffany, back to you.
Okay, thank you, Andrew. Thank you so much, for the wonderful presentation. Now we've come to our last speaker for today, Mr. Ajit Raika, who is a co-founder and executive chairman of Validus, a P2P lending platform company offering short-term business financing to SMEs. Now, he'll be sharing more about some of the key challenges faced as an SME when venturing into the Indonesia market, as well as the ups and downs that the company experienced in the process. So, Ajit, over to you.
Thanks, Tiffany. And, a big thank you to the Singapore Chinese Chamber for giving us a chance to talk to, and I was just seeing last, Tiffany, almost 270 members / participants. Appreciate it. Yeah. I think over the next 15 minutes, I'd really like to talk about our journey into Indonesia. Hopefully, I will share some reasons as to why we got into the market, what were some of the challenges we faced, and hopefully will help your participants to understand how, from a startup perspective, it makes sense to be in Indonesia. Okay, we are Validus. Validus is Singapore's #1 P2P lending platform. Essentially, as a platform, we connect borrowers, SME borrowers who need financing, to accredited investors who provide financing. And till date, we have done, as a platform across our countries, almost $500 million of loans to SMEs over the last 4 years. Validus is a Singaporean company founded in 2015. And today we are present in 4 countries, which is Singapore, Indonesia, which I will spend a lot of time talking about, Vietnam, and Thailand, to be launched in the next 2 months. Just as a backdrop, we are regulated by the MAS and the OJK in Indonesia. So we are a regulated entity. We are not just any financier in the local context. You can see below, we have also won a series of awards, all the way from Global Banking Awards to the Singapore FinTech Awards in 2019, and a host of other awards that gives our participants a sense of the fact that we are regulated and we are not some fly-by-night operator that has gone to these different countries. A quick slide on how we are different compared to banks. Let me say it upfront that we are different from a bank, but yet we consider ourselves as complementary to a bank and not a competitor to a bank. These are the 4 points that make us different from a bank. Point number 1 is banks' processes. For those of you who have tried to borrow, SMEs particularly who've tried to borrow from banks, are very complicated, lengthy turnaround times. On platforms like us, we give customers, SME borrowers, a solution to their borrowing needs within less than 48 hours. This is the same in Singapore, it's the same in Indonesia. The other differential is most banks ask for strict collateral, hard collateral requirements. Because Validus or Batumbu, our Indonesian platform, is a very tech-driven platform, we do unsecured loans for SMEs within a 24-hour period, as I said earlier. Banks prefer shorter tenor loans. We really cater to the customer's needs and are indifferent or agnostic to the shorter or longer tenor loans, bigger or smaller loans that a customer may request. And banks' processes, for those of you who are SMEs, involves a lot of fees, expensive and alternate financing charges, versus our platforms, because we support our platforms through accredited investors are extremely competitive and a very low cost alternative for SME borrowers who wish to borrow through platforms like ours. Okay, that was a little bit about Validus. I think the idea of this focus of this presentation is really to talk about Batumbu, our Indonesian entity, and why we went to Indonesia. Our entity in Indonesia is called Batumbu, which has been in business now for just a shade under 17 months. And in the last 17 months of existence, we have already disbursed almost 700 billion rupiah to our Indonesian SME customers, which is quite a sterling performance given that we are less than 18 months old as a company. We really, as a vision for Batumbu, Batumbu is really a shorter form for Bertumbu, which means really growth or growing your business from an SME perspective. We would like to be a catalyst for growth for sustainable, growth for all SMEs in Indonesia by providing them not just access to finance, but also helping the SMEs grow fast and supporting local economies in the countries where we operate. And Batumbu or Indonesia is a great example of how we've done all those three things as to support SME growth in Indonesia. The next slide talks about why did we as a Singaporean entity decide to go to Indonesia. 4 points really. One is the Indonesian market from an SME perspective is a huge market. Today, the number of SMEs that exist in Indonesia are almost 1 million. And this is separate from the micro businesses, which number another 54 million, because you keep hearing about 54 million M and SMEs. Just the SME market is over 1 million customers in the Indonesian market, which really makes it the most attractive market from an ASEAN perspective for anybody who wants to be present in a very large, fast-growing market. The second point, which is very important for us, because we are financiers, there was a huge unaddressed financing need in Indonesia. In fact, the unmet SME financing need, and these are not our numbers, these are IFC Washington numbers, is almost 1320 trillion. That's almost $132 billion of unmet needs for SMEs per annum in the Indonesian market. Extremely attractive from our perspective as financiers. The third reason why we decided to enter Indonesia is unlike, I wouldn't say unlike, but different from some of the other markets in ASEAN, Indonesia's economy is pretty digitally evolved. Much of the population is tech savvy, and you keep hearing about, the average number of phones an Indonesian has per capita is a little over 2. That makes it an ideal market from our perspective because we are a very tech-based peer-to-peer lending platform. And with much of the population being reasonably tech savvy, that makes it a perfect place to start a new business, which is what we did in the case of Batumbu, from a P2P platform for a perspective, because we are an extremely tech-driven, non-paper-based straight-through processing platform based in Indonesia. And the last point why we decided to enter Indonesia, which is not unimportant, in fact, I'd say rather important, is very strong government support and a regulatory framework that supports the creation of P2P platforms. And I think Pa Mohammed spoke a little bit about governmental support in his earlier slide, but I would like to add to what he said. Not only is there strong government support, but the OJK, which is the regulator who manages P2P platforms in Indonesia, is also a very collaborative partner who are really trying to minimize the proliferation of delinquent platforms which are unethical, but at the same time supporting genuine P2P lending platforms for support of SMEs in the context of Indonesia. And that makes it a very attractive market, not just for us as a P2P platform, but I'm sure a lot of participants who are listening, the support that the government gives, including regulatory support, is something that makes the market very attractive for certainly a P2P lender, but could also be other businesses as well. And I think Mohammed covered that quite well in his presentation. Having said that, Indonesia was a very attractive market for us. And, I listed down 4 reasons, and I'm sure there are other reasons as well that some of you may have, why it makes sense to enter the market. I thought I'll spend the next couple of minutes talking about, yes, it's a very attractive market, but what are some of the challenges we faced? And I'm sure some of them will apply to you, some may not apply to you as listeners. What were some of the challenges we faced in the Indonesian market? As financiers for SMEs, clearly availability of financials on SMEs is extremely important because we based our lending on technology models, on algorithms that we have developed ourselves, on the use of alternate and surrogate data. Having said that, the availability of financial information of SMEs and the reliability of financial information of SMEs in Indonesia can be a challenge. Having said that, that in the context of SMEs is not unique to Indonesia. We face similar situations in some of the other markets that we already operate in, for example, in Vietnam. So while that is important, it is not unique to Indonesia. Let me re-emphasize. I think the second thing that is unique in Indonesia and we need to be aware of, or you need to be aware of should you decide to enter the market, is you have to be cognizant of the cultural nuances of and in Indonesia. And I think Andrew referred to that earlier, that it is important to understand the cultural nuances. Often they say in Java, what is said is far less important than what is not said in the market. So it's important to understand that. And in that context, it's important to also, if possible, have a very strong local partner who will help you get over these cultural nuances, or at least bring you up the curve on the cultural nuances, which is very, very important in the context of Indonesia. For example, in our case, we have 2 very strong local partners with the same high level of integrity and principles and ethics like us, who really help us navigate the cultural local landscape effortlessly. And it's important for you to also keep that in mind. The other challenge that we faced as Validus, as a P2P lending platform, as I said earlier, that we are a platform that facilitates borrowings or loans to SMEs by connecting them with investors who would like to invest in those loans. Given that Indonesia is a relatively new market, having said that, this whole P2P lending space is less than a 5-year-old market, a lot of the investors in Indonesia were and are quite unfamiliar with this new alternate asset class of lending to SMEs. And therefore, even from our perspective, there was a fair amount of socializing and communication and education that had to be done and that continues to be done by us to really bring investors up the curve on this new alternate asset class and how it makes sense for them to use this asset class to lend to SMEs. It is not something that they will lose their shirt on, but really will give them a really good risk-reward balance should they decide to invest in these SME asset classes that we as Batumbu bring to the table in Indonesia. 2 other challenges that I think we faced, like I said, we are proudly Singaporean, now present in 3 countries, is you cannot, and let me re-emphasize, cannot blindly replicate or photocopy a Singapore model. You cannot take an exact Singapore model and photocopy it in the Indonesian context because that will lead to failure. From our perspective, we say we have a global architecture, but our implementation is very local. So it's a global kind of model that we call. So there are elements of a globality and strong elements of local understanding, local market knowledge, which we bring to the table. But that was a challenge that we faced because we really thought that we will take and photocopy a Singapore model into our Indonesian entity, which is called Batumbu. Last, and let me just caveat this by saying it's not that there is no local talent, guys. In our business, we are a very technology-focused P2P lending platform. In our business, we did find initially some challenges in hiring local talent, because a lot of the people that would join us or would join a startup like us, and like I said, we still are a startup, only 16 months old, we did find some challenges in being able to recruit local talent to join a startup like us with the mission and vision that we had set for ourselves. So it's not that the market does not have talent. As a startup, you might face that as a challenge where some of the local talent might not be or are not as amenable to joining a startup as in some other markets. So, I'm sure each of us who've entered the market will have some of these elements which are common, but you could have unique challenges that are applicable only to you as a particular company. But I just thought I would share as a P2P lending platform and a Singaporean company, what were some of the issues that we faced. Having said that, I think the opportunities outweigh the challenges, and I would strongly urge participants and people who are listening to this to keep in mind that I think the opportunities far outweigh the challenges that you will face in the context of Indonesia. Okay, my last a couple of few slides on COVID. I think it's unfair to not talk about COVID in the current context, and I think all my earlier predecessor speakers have spoken about COVID. So I'll spend a little time talking about COVID purely from a Batumbu perspective, purely from a platform perspective. So I will not, and I know Pavilion spent some very, I love these slides when he spoke about the impact of COVID from a macro perspective, but I will restrict my impact analysis to talking about it as a platform. The first impact of COVID was there was a huge increased demand for SME financing in the context of Indonesia. Now, this is a very natural phenomenon that happens because, as you know, whenever there's a crisis, the SMEs who tend to be at the bottom of the pyramid in any ecosystem tend to get impacted the most. And when they get impacted the most, their receivables tend to get stretched and their payables demand money faster. And therefore, demand for financing always increases. And we, experienced exactly the same thing in Indonesia as well. Having said that, and I'll talk about this, the impact to our business in Batumbu, which is our company in Indonesia, continues to be strong, and our NPLs or our non-performing loans, touch wood, I keep knocking on wood every minute when I say this, continue to be at 0 or 0%, which is quite a remarkable performance in this environment. Our strategy in the current COVID situation is to continue to identify segments and grow in segments which have not been as severely impacted by the COVID-19. And I know Pa Mohammed spoke about it. I liked his graph about the red industries going all the way to dark green industries. So we have in this environment tended to stick to the more green industries, similar to his chart. Because like I said, ultimately the investors who are a new breed of investors in this market need to feel comfortable that even in a situation like this where SMEs get impacted, their money is reasonably well protected and they do not end up losing too much money. The other thing is, of course, the need for alternative financing to meet the ongoing needs for SMEs for recovery and growth is even more important in today's environment where the demand for financing has increased meaningfully. The right-hand side of this slide really talks about, given the situation on COVID, what have we as Validus done to respond to that? Of course, we have, like everybody has, we have to adapt to the new norm with minimal disruptions to our customers and our employees. We have done a couple of things. One is clearly we have leveraged and to minimize disruptions and streamlined our processes, and clearly accelerated a lot of our technology developments and projects. And I think we've accelerated it by at least 6 to 12 months to really fast track all our developmental projects to adapt to the new norm much faster than we would have done if COVID hadn't happened. The other thing that we did as a business, as a company, is we raised money, Series B round, because I think in this environment and even going forward from this environment, it's really the last man standing who will survive, and therefore having enough capital, enough resources to really have a runway for the next 18 to 24 months is super critical, and I can't overemphasize how critical that was. And we closed a Series B round in March, just around the time the COVID was starting, which was, I think, a good, in hindsight, a perfect move for us, because that will give us the runway for all our countries for the next 12 to 18 months. From a credit standpoint or from a lending standpoint, we continue to focus on our partners' ecosystems, which means we have a set of partners, and today we have almost 14 partners that we work with actively in Indonesia. This is growing, this list is only growing. And we continue to focus on them and their ecosystems. When we say ecosystems, I mean their buyers, their suppliers, their distributors, their ecosystems for lending to grow our book. And I'm happy to say that even though we had the COVID-19 and a lot of our friendly competitors had volume drops in the last 4 months, in our business in Batumbu in Indonesia, we have grown our volumes by almost 3 times in the last 4 months. That's a remarkable growth and really talks volumes about our strong support for Indonesia, our strong support for Batumbu and our customers, and our strong support to continue to support our existing customers, even in this environment. And I'd like to add or conclude by just talking a few takeaways from our perspective as a platform. I think, guys, businesses everywhere are currently facing the economic stress of COVID. Big boys, small boys, medium boys, large boys. However, it's important that each of us rise, and we've tried to do that in our own small way, rise to the challenge and really ramp up or accelerate your tech capabilities and digital adoption. Because whether you like it or not, the world is changing. The world has changed and will continue to change going forward. And the earlier we accept and accelerate all the tech capabilities and digital adoption that is needed, the better it is for us. Continue to focus on strategic partnerships. I gave you an example of how by focusing on these partnerships, we have managed to grow our business 3 times, which is 300% over the last 4 months. And that could only happen thanks to our focus on partnerships. We as fintechs have the agility and the innovation needed to deliver great new solutions and create new solutions for our partners. Our partners are our customers. And last and not the least, I think from our perspective, really, these are tough times, but adversity has inspired big time creativity in our organization. I'm sure it's as valid and applicable to you as well. Take advantage of this situation to really suck out all the creativity that exists in your teams, which is latent. And I would strongly urge you to do that because the benefits of that are just too much. With that as a backdrop, hand it back to you, Tiffany. Thank you so much. And sorry.
Okay, thanks Ajith. Thanks so much for the presentation. I hope that participants have gained a first insight view of the challenges faced by villagers when entering the Indonesian market. So without further ado, now let us come to the Q&A session. Now, before we begin, for those of you who would like to receive the presentation deck, please take some time to scan on the QR code on the screen right now to fill out a short survey. After you have completed the form, the presentation decks will be sent to you a few days later after editing is done. Okay, I understand for some of you who are viewing from the mobile phone itself, you may have difficulties on scanning on the QR code, or rest assured that we will also be sending you the link to it for you to fill out the short survey after the event. Okay, now let's welcome back our 4 speakers. Today, we are also happy with us to have Mr. Roy Tan, Managing Director of Global Enterprise Banking in OCBC, who will be joining us as the moderator in the session as well. He has more than 25 years of experience in commercial banking, corporate banking, and corporate workup. Now, if you have any queries, please feel free to type them into the Q&A box as you have seen below in your screen. And due to the time constraint, we may not be able to answer all questions. Thus, we seek your kind understanding that should your questions not be able to answer during this session, please email SCCCI directly, and we will forward your questions to the speakers. Now, I'd like to pass on the time to Roy to start off with the Q&A session. So over to you, Roy. And I also like to invite all the speakers to on the video and mic. Yes.
Thank you, Tiffany. Thanks very much, and good afternoon to everyone. My name is Roy. I am in OCBC right now. I head up the regional business in enterprise banking, which is what other banks would call it commercial banking. So basically meet large size companies. That's basically what we look at. Now, I mean, it's been a very interesting 2 hours actually, from our 4 esteemed speakers, they have been able to provide viewpoints, from different aspects. We then spoke about the macro, aspect of things, and Andrew, Ajit, as well as Faisal, all very, very different. Just to get us rolling, right? The questions rolling. What I'll do is that I will post them some of the questions. These are questions largely from the audience. The audience is amazing. I mean, I have actually a list of close to 40 over questions that were sent to us earlier. So what I will attempt to do is to group them together such that it makes it a bit easier for our speakers to address the questions. I actually first did, this year, right? The first webinar we did with SCCCI was in January, and William was also one of the speakers in the one that we did face-to-face. We don't call it webinars then, it was actually a seminar that we did in SCCCI's office. Obviously things have been very different. I mean, with COVID and everything, I would call it basically a different world right now. So William, I think to get us started, the question I'd like to ask you is, we spoke about some of the ill effects or the negative things that have happened with COVID. I'd like to chat with you or get you to share with the audience, right, what you would see as opportunities, with COVID. Can you share with us on that?
Sure, of course. Yeah, thanks for having us back again. First of all, well, opportunities, I guess, not so much unique to Indonesia specifically, but I think everywhere else. Like how we do this now, right? You mentioned half a year ago, 9 months ago, the word webinar might be a bit distant. Now it's every single day, right? Especially during the lockdown, like here, circuit breaker is Zoom call non-stop. And now obviously we're doing that. So anything that touches on tech, I know Ajit talked about, it's this very interesting platform that's obviously very much online driven. But anyway, I think not just anything that's sort of specifically tech, specifically startup, but I like to say that it touches all and different aspects of life. And because of it touches different aspects of life, it touches different aspects of business. Like, I send my 2-year-old daughter to childcare, and I can tell you have Zoom call on that. I don't know how they can conduct lessons on that front, but even childcare, even 2-year-old education, you cannot escape having tech. So in any of your businesses, I would say, obviously, I believe we have a fairly good audience in terms of spread today, touching on different kinds of sectors and of the economy. I think tech is going to play a bigger role. I think we can't talk about specifics, but just to highlight all these changes that are bound to change. I think even before COVID, what thing we know, this thing was going to come. This thing was already coming at a speed. Some people might think it's too fast, but now it's like Shinkansen bullet train speed. It just comes at you because every business is forced to adapt. You have no choice. Either you do this online meeting or you don't meet at all, get no business done. So there's no choice. So I don't think even, let's say, magically we find vaccine, minus a Russian one, right? Magically we find vaccine and this thing goes away. Some of the trends that he has uncovered as accelerated, it's just gonna stay. I think that's probably the key. Outside of that, I think maybe more specific to Indonesia, healthcare, education. I think it's an open secret that, you go to, say, Gleneagles, Mount Elizabeth in Singapore, half the time, I go to the elevator, I can speak Bahasa to anybody because it used to be the case that a lot of Indonesian, family and friends come here for healthcare. But again, some of the things that COVID has changed is really the imposition of national borders, right? You cannot fly freely as before. My parents live in Bintan, which is just an hour and a half ferry away. I haven't seen them for ages. I don't know when I'm going to see them, because national border is hard and fast now. And all this stuff that we take for granted, cross-border flow of people, etc., that's going to come, and cross-border flow of services, same thing, right? Because of that, I think there'll be a greater degree of localization of some of these services that Indonesians traditionally procure from abroad. I think there's obviously going to be big business opportunities for those that can capture it, especially within healthcare. Obviously, there's also a greater uplift of health awareness in general because of this COVID-19. And same thing with education, even for those who are keen to send their kids abroad to Australia, to UK, to US, what have you. Now they got to think hard, just because even saying the money is not the issue, you still want the kids to go there. Even to go there to attend is the issue. So all this stuff, I think, minutiae, but at the end of the day, I think some of these fundamental changes that are not going to really go away because of the change of situation. I'll stop there.
Okay, great. Thanks, William. Thanks very much. Now, still on tech and all, right, I would like to ask about Faizal. From in your setup in Singapore, obviously that's to encourage, that's to facilitate investment in Indonesia. In your this what you've seen in the last few months, do you see what are the sort of inquiries, what are the sort of industries that are most interested to go into Indonesia during this period? Would you like to shed some light on that?
Yes, thank you for the question. I think after the COVID situation, a lot has been changing. Many investors put a halt of the discussion of going to Indonesia because the policy of the company, they want to wait until a few months. But also what is interesting is some sector like healthcare come to our office. Some some company want to set up like a medical device manufacturing facility, and also some inquiries for a hospital. So this is very interesting because with this COVID situation, we need this kind of investment also. So I think beside that, some in technology company, for example, like e-commerce, still asking for inquiries.
Yep. Okay. So these inquiries in the e-commerce sector. Earlier on, Ajit also mentioned that the people are very tech savvy. The usage of handphones is very high. Now, there were actually a couple of questions on technology, or rather on e-commerce itself, right? So I just want to pose this to you. If anybody were to be interested in setting up a tech-related sort of company or anything that's technology-driven, would IPC be the best place or the best first stop to go to, and would you then be able to do some form of a business matching at the Singapore end? Can you share with us?
Yes, if they want to set up a company in tech company like you mentioned, so they can come to IPC, or with this situation, of course, with the virtual meeting. So we can contact our colleague in Jakarta also to discuss about their plan, and also we need to find out what kind of business they would like to establish in Indonesia.
Mm-hmm.
So we have a classification code, 5-digit number. So after we find 5-digit number, like Andrew mentioned earlier, we also have negative investment list. So some business is closed for investment, and some is open with condition. So first, we need to find out what is the business first, and so we can check with the classification. So yes, we accept and they can contact IFPC, so we could facilitate them. We will try to assist them to set up the company, and not just setting up the company, but also they can run the company in Indonesia. So if they find a problem with the land acquisition or something like that, or tax, they can contact us also. We will assist them.
Okay, thanks very much. Thanks, Bart. Yeah, I think it's really interesting because if you look at the setup here, right, from various ASEAN countries, they all have offices, and I think with this one-stop shop, it will be very useful to at least get in touch with you, including the one-to-one meetings that you spoke about earlier, right? So we will get them to look for you. Yeah. Okay. Now, Andrew, thanks for the very interesting topics and the case studies that you shared earlier. The questions that, or rather that were posed to you, right, were this. Number one, there are, how many sort of taxes are there? You have VAT tax, you have the corporate tax. You can share with us a bit more about the tax situation. That's number one. Number two, most of our audience and participants, actually they'll be keen, should they set up business in Indonesia, if they want to bring the money back to Singapore, what are the things they need to look out for? So these two questions for you, Andrew.
Right, thank you, Pak Roy. Okay, so basically with regards to the first one, that from the investor's point of view, I think the taxes applicable in terms of Indonesian related will be, I can summarize it into three lah. Yeah. So basically you have number one, which is the basic corporate tax for your entity, for your business entity in Indonesia, which is, I mean, under the normal times is 25%. But now I think COVID times, they're trying to reduce it down to 22, if I'm not wrong. And in the omnibus bill, they're trying to reduce it even further to make it competitive and comparable to what you have in Singapore. So that's one, the corporate income, corporate tax. Then the next one, of course, with regards to withholding taxes in Indonesia. Now, this withholding taxes is something different when compared to what you have in Singapore. Withholding tax, in a layman's perspective, is the company will withhold a certain amount of tax, all right, on behalf of the recipient, and the company will then pay the Indonesian treasury, the tax office, all right, this amount, and then give the receipt of payment to the counterparty, so the counterparty can show that, no, look, tax compliance has been done. I mean, a bad joke for this is last time is because, there was a joke like they'll say that they don't trust, especially when it comes to employees, right? You pay them the salary, they may not choose to comply. Back then in the days, they may choose to just take the money and, and then that's it. They'll tell you, oh, then that's the company's problem. So that on its own is understanding. It's an understanding as how withholding tax work. So for example, in this employee case, which I mentioned, so instead of paying the employee the full salary, you withhold a certain amount based on the tax rate under the law, and then the company will then pay to the Indonesian tax office, and then you give the receipt lah. So this goes for whatever transactions with your consultants, vendors, suppliers. You just calculate what is the withholding tax rate under the law, and then you just withhold that amount and pay to the government, and then just give the receipt over to your vendor or the party in that sense lah. Then of course, with regards to the last one, the third one is the VAT. The VAT is similar to what you have in Singapore, your GST lah, yeah? It's now pegged at 10%. So the question for companies in terms of foreign investors is whether this VAT is meant, when do you need it? All right. So for example, for companies who are generating a revenue of 4.8 billion, which is about 480K, then of course the VAT becomes mandatory under the law. Now, but if your revenue is less than that, then it's optional. But of course, with having said this, the investor may also need to weigh out like the pros and cons, whether you want to be VAT registered or not. Because if you register VAT now, then whatever VAT that you quote unquote input into your system, or you pay to other parties, then you can be credited into output and input. Then if you have an excess payment, you can always seek for a refund. So that is something which you may want to consider as to when you want to get VAT. Now, as a foreigner, if your company, is just freshly incorporated and you do not have a work permit or you're not residing here, then, applying for the VAT may be a little bit technical and challenging. But of course, I mean, there are ways to legally overcome and circumvent it, and we'll be happy to, to discuss the options available to the investor in that regard. Okay, but sorry, your second question regarding
repatriation
the
of fund. This is possibly the
okay.
most one of the most important things. If I invest in Indonesia and the business is making money, how easy or what are the ways in which I can bring money back out from Indonesia back to Singapore?
Right. Okay. That's a very, very practical question, Pak Roy. So, in terms of repatriation of funds, the right to repatriate funds and profits is actually a statutory provision under investment law. So, with regards to legal certainty, we have clear legal certainty on that. I mean, contrary to what people mention, like, Indonesia, easy to put money in, difficult to take out. That is actually short of a lack of a better phrase is BS. All right.
Okay.
It's I won't say the full BS, but I'll just BS. I'll leave it to your imagination, guys. But so basically, in a sense, okay, it's easy, administrative, but however, you just need to have the underlying documents lah. So from my clients' cases so far, repatriation of funds have never been an issue. Of course, we need to have the proper underlying documents in hand, because as part of the compliance, the banks in Indonesia will also, request for certain underlying documents. Then, of course, with regards to underlying documents, then there comes to be the compliance parts with regards to the withholding rates. Then, of course, you need to see where you're repatriating to. For example, if you are repatriating to a place like Singapore, the parent company, then you just see what is the dividend withholding tax rate for dividends right now. It's now currently between 10 to 15%. Then it varies from transaction to transaction. So it's not difficult, but of course, it's not something that can happen within the day. You need to have proper planning, and even repatriation of cash. I once did a transaction where we repatriated, a high 6-digit figure out in cash, and it's still doable, but you just have to have proper planning and proper documents, so that to ensure that we are all fully compliant with the law, and there's no problem in the compliance sector.
Okay, great. Yeah, thanks, Andrew.
Sama-sama, Pak.
I think at this moment I need to do a bit of advertisement, right? So OCBC has actually close to 300 branches in Indonesia itself, NISP, and we do a fair bit of helping our customers remit funds as well. Now, Ajit, now finally to you, right? Question to ask you. You spoke a bit about the difficulties that, or rather your learnings, for your own business during this period, with COVID. Now, because you do P2P lending to many of these SME customers out there, right? What are the three things, right? The three factors you see that are essentially, or they are extremely important to businesses in many sectors during this COVID period? I mean, cash flow, or is it what? Maybe you can, share with us some of this.
Yeah. Thanks, Roy. Good question. We keep getting asked this question all the time as to how do we lend to SMEs. I think a couple of things. There is no silver bullet. There's no single thing that we look at. But in this environment, two things are very important, as I said earlier. One is we are extremely focused on our partners' ecosystems. So we have partnerships with multiple companies in Indonesia, and their ecosystems, be it their vendors or be it their distributors, customers, is what we look at. Having done that, we then do not differentiate between a good or a bad vendor. We say everybody in the ecosystem is our customer. Secondly, what we do look at in this environment, in this COVID times, is cash flows. Ultimately, that is the only real thing an SME has. Financials can be, adjusted. Other things can be adjusted, but cash flows can't. Cash is real, and that's the only thing that we can touch. Of course, there are other things that we look at as well, track record of the customer, of the SME borrower with their principals, with our partners, other alternate forms and surrogate data that we look at. So we look at a whole host of things, but yes, I would say, are you part of my partner's ecosystem, and how are your cash flows would be two of the more important ones, in addition to several other things that we look at as a technology P2P lender in Indonesia.
Okay, great. Thanks, Ajit. I think, if you look at the SME business in Indonesia, the pace in which it's developing is really quick, and your use of technology, obviously that's going to be really quite something, in reaching out to as many customers as possible. I think because of timing, right, or rather the lack of time, I will just ask a pretty general question to all our panelists. It goes something like this, right? If during this period, right, and going forward, what do you think would be that one biggest challenge our investors would face when they go into Indonesia? And the second part of the question is, what do you think would be the biggest reason why they should invest in Indonesia? So maybe since you're on this, Ajit, you want to maybe answer this first?
Yeah, I'll answer both in a similar way, Roy. One, why should you invest in Indonesia? I think from our perspective, and I would urge others to think along the same lines, it is the most attractive market in ASEAN. So if you have a desire to be an ASEAN player, then you cannot not be in Indonesia. You have to be in Indonesia. And you said, what is the biggest challenge? Like I said, Indonesia's challenges are not unique from other countries. So focus, from our perspective, focus more on the opportunity rather than the challenge or the issues, because challenges are similar. But I think when you put both the challenges and the opportunities together, opportunities trumps the challenges 5 times over. So don't ignore Indonesia. It's a great market. I almost sound like Pa Muhammad. We haven't spoken, but that's what we truly believe in.
Okay, great. Thanks, Ajit. Pak Faizal, your views on this?
Yes, thank you, Roy. So the second question first. Why in Indonesia?
The positive, yes.
Yeah. So because of Indonesia is the biggest economy in ASEAN, so also because Indonesia is number 4 largest country in terms of the population. So I think with the 260 million people, it's a huge market if you want to set up a company in Indonesia. Imagine if you have 1% of the market share, it's already big. So, and also beside the market, also the growing middle income in Indonesia is quite big. So it's also one of the reasons why they should choose Indonesia. But also we do have some challenges. As a big country, we do have not similar like Singapore. We do have central government and local government, provincial government, and city and municipality government. So this is quite challenging because we have more than 500 regional government, 34 provinces. So with the regulation in the central government, we have central regulation, but also in regional government, they do also have regulation. So that's why government needs the omnibus law. So after the previous speaker mentioned that with the omnibus law, so we can harmonize the regulation in the central government and also in the regional government. Thank you.
Okay, thanks. Andrew, to you.
Thank you, Pa. So basically, I think in terms of the the challenges is basically due to the lack of understanding, because if someone doesn't understand something, automatically the human nature would tend to take a degree of caution or even fear it. So the thing is, importantly, is once the understanding or the culture gap can be bridged, there'll be no gap anymore, then I don't think this is an issue. A lot of people have a lot of misconception about Indonesia and the challenges, and a lot of horror stories. I wouldn't say those are not true. We have to be realistic. Those are true as well. But one can always, learn from the past experience, or learn from, a bit of advertising, advisors such as tax consultant, legal consultants, or even bankers, to say what are the ways to avoid paying or paying for a not very expensive lesson learn. So I think that is one thing that is the mental side. I mean, once the investors can overcome that, then I don't think doing business in Indonesia is a problem. I mean, with regards to the benefits, I mean, it's about Indonesia is it abounds in opportunities. You have land, you have people, you have natural resources, you have all the active ingredients to make your business a successful venture. So I think that's from my perspective. Thank you, Pak.
Thanks, Andrew. Okay, William, last but not least, you want to share your views as well?
Okay, sure. I guess I cannot agree more with the other speakers in terms of the potential, right? Indonesia is big. It is by far the biggest in ASEAN, number 4 worldwide. I think in terms of just focusing on how things have changed, right, in the last half a year or so, obviously, I think I would say in terms of valuation, in terms of how, just to zoom in on one specific industry and in specific location that's hit badly, right? Imagine running a chain of villas in Bali right now, right? At first you could, for a while you can open it up to domestic tourists, but now that cases are picking up again, I think that avenue is also shut. And precisely because of that, on the flip side as well, if you are businesses, if you happen to be owner of all these nice, by the Ubud paddy fields, or by Uluwatu rock cliffs, all these nice villas, if you have cash flow issues, you're gonna scream for buyers. I think for those people who have been eyeing this segment, say I'm just using one segment that has been badly hit, of all things, obviously tourism is badly hit, and Bali is very focused on that. I think in terms of valuation, obviously the asking price has come down massively, right? I know somebody who runs hotel chains around ASEAN, and one of his biggest complaints is that the asking price for Indonesia has always been unrealistic, because I mean, obviously besides because of potential growth, right? But now the calculation has shifted. So for anybody eyeing for longer term, medium term opportunities, obviously that's going to be key in terms of valuation, what price you pay for it. The challenge, however, for anyone who want to go invest in Indonesia now is going there. To put it very simply, it's because a lot of national borders have been shut because of the virus cases in Indonesia that continue to be festering, unfortunately. It'd be very hard for government, say from Singapore, from Malaysia, to open up the channels again. I know they're starting to negotiate in terms of the green lanes and all that. I think if cases come down in Indonesia and in partner countries, I think the avenue is obviously going to be open. But for anybody who want to plunk in millions of dollars, it's not like buying anything from Alibaba, right? You spend $50 on something, if it doesn't work out, fine. This is buying real assets. Obviously, you want to be there, you want to work with real people that your business partners, and not having that physical connection, that physical contact because of the national restrictions, the border restrictions, that is really front and center still the challenges that we probably have to contend with still, unfortunately. So that's it from me. Thank you.
Okay. Yeah, thanks, William. Thanks. Okay, everyone, we know that it's getting quite late in the day. We kept this, initially we were saying that this seminar, this webinar is a bit long in terms of number of speakers and all, but as CCCI and us, we feel that, this is really the right opportunity and really the right time to spend a bit of time to understand the situation on the ground, because I think the opportunities are obviously still there, as you heard from all the speakers. So, without, further delaying the webinar, I'll just hand you over to Tiffany. Tiffany?
Okay, thank you, Roy. Thank you so much for moderating the whole session. We hope that the participants have really benefited a lot from the webinar sessions itself. Okay, and firstly, most of all, we would like to thank all the participants, and a big thank you, of course, to Roy, Wei-Lian, Bapak, Faisal, Angeline, Andrew, Ajit for their time and valuable sharing today. We hope that you have benefited a lot from the webinar, and also please let us know of your comments on the webinar through the feedback survey. You can scan on the QR code on the screen or follow the redirect link after you have closed this session. The Zoom will pop up a link for you to click onto the survey, and you can just click in to do the survey. So we have also just to inform you, we have also another exciting session lined up for you tomorrow at 2:30 p.m. Okay, please join us for the Myanmar market edition of Thriving in the Next Future of ASEAN. So stay safe and stay healthy, and we shall see you tomorrow. Thank you, everyone. Thank you.